Welcome to Taxcellent Tax Consulting Services. We are here to guide you on your tax issues and also to assist you for a better tax planning for your business. Come on in, let's brush up our tax knowledge.
Hello Miss, welcome to Sheen and Company LLC. How can I help you?
Thank you. I want to ask about disposal of asset. Is there any allowance that we can claim?
When residual expenditure more than sales proceeds, it called balancing allowance loss. It should be disposed at the year end instead of the following year to obtain balancing allowance to shelter excess income. However, when residual expenditure less than sales proceeds, it called balancing charge gain. So that's why it should be postponed to the following year instead disposed at the year end in order to decrease the tax liability. This is for 2 years and 1 day onwards.
Oh, what happens if we dispose exactly 2 years or less?
When we dispose of asset exactly 2 years or less, as stated in the Para 71 Schedule 3, the total capital allowance will be clawed back as balancing charge unless commercial justification can be provided. Exception for clawback are fire damage, technology obsolescence, accidents, and etc. Remember, the timing of sale is important, minimum 2 years, to avoid clawback of capital allowance, as that will increase the statutory business income, which is not good for the business. Thus, they will pay higher tax.
Hi, I'm planning to take up on a loan to finance my business investment, but I need to know more on the chargeability of the interest on loan.
Hello. Okay, if that's the case, there are some important things for you to know in regards to the interest restriction on loan that could assist you in your tax planning later. According to Section 33, Subsection 2 of the Income Tax Act, where a taxpayer has borrowed for the purpose of producing business income, the deductibility of the interest paid on borrowed money would be restricted based on the following formula: amount of investment divided by the amount borrowed multiplied by the interest expense. It will give you the amount of interest restricted. So when a business makes a loan, they will incur interest on loan. So this interest paid is deductible since it's related to the business, but the amount of deductible interest will depend on how much of the investment will be facilitated by the loan. Let's say our investment cost is equal or bigger than the amount that we borrow, the whole amount of interest is non-deductible. On the other hand, if the cost of investment is less than the borrowing amount, meaning that you borrow more than your investment cost, then there will be a portion of that interest that will be deductible. So as you can see, one of the many ways that a business may carry out their tax planning is if the business is to borrow money or make loans, they should ensure that the amount borrowed is equal or higher than the investment amount so that some parts of the interest expenses will be deductible. This is to maximize the allowable expenses so that the business's chargeable income will be reduced. The business could also review the interest charges offered annually so that they may source for cheaper financing. All of this is done to reduce the income tax payable of the business. Now, what about the tax treatment on the interest restricted? Okay, firstly, the amount of interest restricted shall be added back to arrive at business adjusted income. Next, it will be apportioned to individual investment source, and if it cannot be offset against the related investment source, the excess interest expense may not be carried forward. Therefore, it will be treated as a permanent loss. I hope with this clarification on interest restriction on loan, you will be able to carry out a better tax planning for your business. Thank you.
Hi, I'm ALIYA.
Hi, Miss ALIYA. My company is currently planning to purchase a machinery. So, can you explain to me the choices that I have and which one is the best one to opt for?
Firstly, you need to know that there are 4 alternatives of acquisitions of assets. The first one is by cash, second one is by term loan, third one is by hire purchase, and fourth one is by leasing. Let's go through one by one. In the case of outright acquisition by cash, the company will be eligible to claim for capital allowance based on full cost of qualifying assets, except for passenger vehicles that are restricted to either 50,000 ringgit or 100,000 ringgit. The company will also be able to claim for initial allowance and also annual allowance for the first year. And annual allowance will be given for each subsequent years until full relief is given for the qualifying capital expenditure. Do bear in mind that the acquisitions of assets by term loan is just the same as the acquisitions of assets by cash. The only difference is that the loan interest will be allowed as a revenue expense deduction by the virtue of Section 33, Subsection 1, Para A. But if you opt for acquisitions of assets by hire purchase, different treatment is applied. Why? Because capital allowance in this case is claimed based on the installments paid and not based on the qualifying asset expenditure. The initial allowance will be given based on each new installments paid. Meanwhile, the annual allowance will be given based on the accumulated installment paid. But note that it's depending on the capital portion. Usually in the case of acquiring assets using hire purchase, the capital allowance claim will be much lesser comparing to the outright acquisition of assets by cash or by loan. And it usually takes a longer time to fully claim the capital allowance on the qualifying expenditure. In the case of acquiring assets through leasing, the company will not be eligible to claim for capital allowance because the company is not the owner of the leased assets. This type of acquisition is also known as the most advantageous method for taxation purposes. Why? Let's watch it later. In terms of timing, the full amount of lease rental gets revenue deduction in the year of incur, while the claim of capital allowance will need to be spread to various years according to the specific rates. As for the setting off, if the company experienced current year business loss, the leasing charges would increase the adjusted loss. Then the current year business loss would be allowed to shelter other income in that current year at the aggregate income level. But if the current year business loss cannot be utilized at the aggregate income level at that particular year, the unabsorbed business loss can be carried forward to future years and set off against any business income at the statutory income level. Therefore, Ms. Daya, if you're looking for something that is good for taxation purposes, I suggest you to opt for purchasing of asset using the leasing method. Thank you. Hello, Ms. Daya. I would like to seek for your advice regarding group relief for loss. Currently, one of my subsidiary company has suffered business loss. Can you please further explain if my company is eligible to claim for group relief for loss?
Sure can, Miss Alia. Let me further explain to you about the group relief for loss. Group relief for loss is fall under Section 44 Capital A of Income Tax Act 1967, with effect from year assessment 2009. Up to 70% of current year business loss of surrendering company can be surrendered to the claimant company within the same group. For example, company A suffer loss for 800,000 ringgit, can surrender up to 560,000 ringgit to company B, which is the claimant company. But these both companies must be within the same group and fulfill all the conditions. The tax implication is that the losses of company may be utilized to set off against aggregate income of another company within the same group. As a result, the chargeable income for the group can be reduced and the group will pay less tax. These are the conditions that must be fulfilled in order to claim group relief. First, both claimant and surrendering company must be tax resident and have same 12 months accounting period. Next, both companies each has a paid-up capital of more than 2.5 million ringgit at the beginning of year assessment. Next, both companies are related parties. Both companies are also not currently enjoying certain incentives such as pioneer status, investment tax allowance, and reinvestment allowance. The claimant company must have aggregate income for that year assessment in order to deduct losses against aggregate income. Last but not least, both companies must be subjected to tax at full 24%. If all of these conditions are met, then Ms. Alia's group company are eligible to claim for group relief for loss.
Hello, I have this idea in creating my own trading company. I thought I could just register my company at any date I wanted, but turns out it's more than just a day. Do you mind clarifying it to me?
Hello, I understand your confusion. I'll try my best in clearing your doubts away. Generally, commencement of date is a specific date that something takes place. In the context of taxation, commencement of date is basically when the company is liable to pay tax for their business income. It is highly dependent on the activity of the business and not based on the income generated. In the client's case, since it is a trading company, the business commencement date would start when the company itself embarks on its purchasing activity. For example, in a bookstore, when the company starts buying supplies for the business, for example like books, the same date should be the commencement date. It is very important for a company to set their commencement date right. This is due to the tax implication that a company can apply on their financial elements for the year end. For example, in revenue expense that are wholly and exclusively incurred in the production of the income, it will be tax deductible against the gross income. However, any expense that was incurred before the commencement date, it is not allowed to be deducted in the year assessment. Next is business loss. If no income is generated for a business in the year assessment, the business loss can be set off against other income or to be carried forward to the future years and to be set off against all business income. All losses before the commencement date should be disregarded and counted as permanent losses. Whereas for the qualifying expenditure, based on Para 55 Schedule 3, if it is incurred prior of the commencement date, it will be incurred on the commencement date itself. The commencement date plays a huge role in setting the basis period for a company. A basis period is basically a time period of which the company pays its tax at the end of each year. The first accounting period will be the first basis period of a company, whether it is more or less than 12 months. For example, a company that has financial year of 1st April 2019 to 31st March 2020, the basis period of year assessment for tax would be year assessment 2020.
Good morning. How may I help you today?
Hi, my business is suffering loss due to depreciation charge on fixed asset used to run my business. This is because depreciation is not deductible for tax purposes. Is there any way I can reduce my tax liability on this particular?
Actually, there is. It is called capital allowance. It's provided under Schedule 3 of the Income Tax Act 1967.
That's great. Can you explain more?
Why, of course. Capital allowance is a tax relief on capital expenditure incurred for fixed asset acquisition. With effect from year assessment 2000, the general rates for capital allowance is divided according to three pools or three types of assets. There are two types of capital allowance, namely initial allowance, which is a one-off relief that can be claimed on the year the asset is purchased only and has a fixed rate, whereas annual allowance can be claimed in the first year and every year until the qualifying expenditure is written off or the asset is disposed. The following table shows the rates of capital allowances.
Oh, I see. Are there any requirements if I want to claim capital allowance?
Yes, there are 4 conditions that a person must fulfill in order to claim capital allowance. The first condition is there must be a qualifying expenditure incurred. This means that whether the asset was paid for by cash or credit, there must be some sort of payment or expense incurred to acquire the asset. Next, you must be the owner of the asset at the end of the basis period. However, ownership in this case includes legal or beneficial ownership. The third condition is that the asset must be used for business purposes. And the last condition is that you must be carrying on a business. This is because capital allowance is only applicable to a business and not an individual. Capital asset is set off against the adjusted income of a business to arrive at a statutory income. Any unabsorbed capital allowance can be carried forward to future years to be set off against the same business income, provided that the business source has not ceased permanently. For example, any unabsorbed capital allowance for manufacturing business of a company cannot be used to set off against adjusted income of the same company's plantation business. This is because it is from a different business source, although it is from the same company. The last one is unabsorbed capital allowance would be treated as a permanent loss on permanent cessation of a business.
Thank you for spending your time with us. Hope it was a pleasant and informative session for you. See you next time.